Hello and welcome, everyone. Happy Friday. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup. Today is Friday, August 18th. I'm Ron Quaranta here with my co-hosts and dear friends and members of the WSBA, David Brill and Josh Clayman. Josh, David, we were joking about it. We're going to give up trying to prep and just kind of start talking about the open issues. David, lots of market action going on. Do you want to kick us off there and then we'll dive into some of our other topics?
Sure. So as all of you must have noticed, we had a very sharp sell-off yesterday afternoon. We went from like around 29,000 to 25, the high 25s, and now we settled in around a little bit above 26,000 in Bitcoin. And a lot of that had to do with the Evergrande filing for bankruptcy here in the US. SpaceX reportedly selling all their Bitcoin, although as the reporting came out, it kind of changed the flavor of that sale. And the fact that, on a macro level, we have higher inflation, more, interest rates are likely to be raised, and 30-year mortgage rates are, heading towards 8%. So I think net, a lot of these macro factors in the markets are affecting crypto, and you saw a big sell-off. The last thing I'll add is there was a lot of whale selling of Bitcoin around 28,000, and that exacerbated the sell-off, which led to a lot of leverage liquidations.
David, as you and I have often said, BTC and some of the larger capped cryptos are risk-on trades in many regards, which reminds me, and I should have done this earlier for everyone watching, thank you all for joining. If you have any questions, please do put them in the chat. Josh and David and I will try to respond to them as quickly as we can. And please also keep in mind that nothing discussed is accounting, investment, legal, or tax advice. Josh, I give up putting together talking points. What's going on in your world? And I'm gonna throw this out there. I know we're all catching up. Shout out to our friend Lewis Cohen for making sure we cover it. Tornado Cash. What was the rendering there from the court?
I mean, so for those who are still reading through the I guess the filings, I guess an important thing to realize, actually a little bit of background. So there actually have been more than one case that have been filed in respect of OFAC's designation of Tornado Cash for purposes of OFAC sanctions. And some of the arguments had focused on this idea that Tornado Cash, a smart contract, right, was not a person, property, right, or an organization, right? It wasn't an entity. And so in one of these cases, which was backed by a prominent trading platform, or at least supported by it, the judge recently, just in the past 18 hours or so, denied a motion for summary judgment brought by the plaintiffs on numerous motions, on numerous points. One of the interesting things, and of course, many of us are still reading through this, relates to the smart contract itself, because a lot had focused on this idea that you can't sanction a smart contract. But in addition to saying like Tornado Cash actually, in the judge's view, is an organization, they also said, you know what, the smart contract is property of Tornado Cash, right? And so in the judge's view, this was not an overreach by the government. Right? This was not something where this went outside of the statutory purview. What some people have said just in the media is that some of the arguments that were raised about this being outside of the scope of what this branch of government, this agency, was supposed to focus on statutorily, that this draws parallels to the kinds of arguments that are being made against the SEC. Of course, there also have been claims brought in respect, for example, of there being a taking, right? And the judge in this Tornado Cash denied the motion for summary judgment for that as well, and also denied it with respect to arguments about First Amendment free speech rights. I don't know, David, do you want to fill in a little color?
No, I think you did a very thorough job there on that, Josh. I would just say that, this is a very complicated issue, and I think that because of the danger perceived by the government and the ability to money launder, I think, when you look at it as a judge and you're looking at the facts, I think if there were doubts on the viewpoints on some of the issues, especially for summary judgment, I think they would lean towards the government and want a more fuller case be made on the merits than not to decide it on, you know, summary judgment.
David, if I could just dive in there, and Josh, thank you so much for kind of, and I realize we're all catching up on the information. It seems to me at first blush that this judge's ruling really strikes at the heart of what the crypto industry has often said, which is, to your point, Josh, it's a smart contract. It's not a company. It's not an entity. But very specifically, the ruling notes that Tornado Cash, and this is not advocating for Tornado Cash in any way. We understand the importance of OFAC and compliance requirements, but Tornado Cash was an entity. That's a very different thing than we've seen in the past. That kind of strikes, David, Josh, at decentralization. And I want to be respectful of folks and judges in the judiciary, but is that an appropriate, in your personal opinion, rendering of an understanding of what decentralization is, or what a smart contract is?
Josh, I'll let you take that.
I mean, I think it's, you know, there were a lot of facts presented in terms of I should say alleged facts, you know, when talking about whether Tornado Cash is a person, right? Now, it's interesting, when OFAC originally had published the sanctions, it referred to Tornado Cash as literally some kind of organization formed on such and such a date. I don't have the facts, you know, ready at the ready in my mind, but I just recall that. And it was only actually separate and later that they came out with FAQs, right? Usually this would be done in a more coordinated fashion, as I understand it, if an agency like Treasury decides to bring sanctions. The FAQs on how to actually get your money, right, if you can't use Tornado Cash, came out later. I think, you know, it's interesting the way the judge described this. They said, you know, it is, the judge sided with Treasury and said that Tornado Cash was a person. I mean, I guess there is a material distinction. The plaintiffs in the case had described Tornado Cash as a decentralized open source software project made of the smart contracts of the Ethereum blockchain, whereas the government described Tornado Cash as an organization that runs a cryptocurrency mixing service. Yep. And they said that this structure involves several developers who launched the mixing service and created the Tornado Cash DAO, and the DAO, which votes on the implementation of new features. And they said that the DAO is made up of users who hold Tornado Cash's governance token. So I think they also had some differences about how they described the smart contract. But I definitely do think that, you know, it does call into question. I mean, when we've seen this treatment of DAOs, like a lot of this is hinging on the DAO. And this goes back, we've seen it in UkiDAO.
Yep.
We've seen it in the predecessor to UkiDAO, BZX DAO, or whatever it's called, in that Northern California case. And this, usually we've been seeing it seems, when you're trying to find a party to hold accountable. And here it's interesting that the distinction was made between the smart contract and the folks interacting with it.
David, do you...
That's a person. Sorry.
No, Josh, appreciate that. David, do you, in your opinion, are regulators or government agencies stretching the opinion or stretching the definition of an organization to bring these forward? And I guess the follow-on to that, and I realize I'm banging the same drum a bit, is what's the appeal path post this? Because there are other organizations out there, particularly from an advocacy perspective, that have rendered thought leadership and perspective weighing on the side of not on the side of the judge. Sorry, a lot there, David. Sorry.
Yeah. No, look, I think in the crypto ecosystem on the whole, it feels like the government is really stretching, whether it be the Howey test or the view of what an entity is, to fit within the boxes of their arguments and their viewpoints on how to regulate the industry. And so, you know, what we have seen is the judiciary has been sort of the arbiter of fact, and as it should be. And, you know, I think that we need to see the whole case play out. But I do think that the government, look, on the crypto side, we have creative arguments about why we think things aren't shouldn't be regulated in a certain way. And I think the government is taking that approach too. And I think as we, if you look into this potential interlocutory appeal that, the government is looking to make in the Ripple case, it's another example of, the government is telling their story. And, I think the industry's belief is that their story goes beyond, what the Howey test is. And, we're just seeing this across the industry. And I would imagine if you ask a government lawyer, they would say that the industry is also, taking arguments and fitting them in to fit their narrative. So, look, I think advocacy in and of itself is storytelling. Each side has a story to tell. You take the facts and you evaluate the law in the way you think most appropriate, and you tell that story. Now, I think what's interesting when we talk about the potential interlocutory appeal is that I think the SEC is going to be challenged because on one hand, they've made certain arguments in the case versus Ripple in the pleadings. And then on the other hand, now on the interlocutory appeal, they have to make other arguments that are sort of opposite to that. And what I mean in particular is, the government said in the Ripple case that, oh, this is very straightforward. It's just, an application of the Howey test. And, that's how they advocated in the case. But now on a potential interlocutory appeal, the government is saying that, oh, the law is not clear, and this is a matter of law and not fact. Whereas I think all parties agree it is the Howey test. So it's a very interesting fine line that the government's walking. And so you can make a creative argument on one side, but you have to be prepared to defend that, where you take a view on one side, but then if you want to appeal, you're going to have to live by the sword and die by the sword.
David, thanks. And I just want to jump in real quickly. Shout out to WSBA member Larry Miller. Larry, we'll post the opinion link with the recording in LinkedIn. We'll also share to members across the WSBA Slack channel and Telegram as well. Josh, David, I want to pull back a little bit. I still get emails from folks, and you both know I'm not an attorney. Can we just one more time? I know we did this last week, and we defined the interlocutory appeal. And the reason I'm asking that is that colleagues, again, who are not in the space of law, look at this and say, oh, this is terrible news. This was bad. And I think there are greater nuances to that. Would one of you be interested in kind of putting out there for the audience, here's what we mean when we talk about an interlocutory appeal?
Sure. I'll start, and Josh, feel free to add to it. So in the Ripple case, there was a summary judgment on several of the charges that the SEC brought. In a typical case, all of the cases, or the word is escaping me, but all of the pleadings that the government made would have to be heard out in their entirety, and there'd be a full trial. At the end of the trial, if one party disagreed with the ruling, they could appeal the district court case up to the circuit court. So that would be the Second Circuit, because we're in New York. However, the government believes that the rulings that Judge Torres made in Ripple with regarding the programmatic sales and the distributions of tokens to employees is such an important issue and impacts the other issues in the case that they're asking to immediately be able to appeal this ruling to the Second Circuit. And that is what the interlocutory appeal is. So instead of appealing it at the end of the case when the trial is fully complete, the government is asking at this point, after the summary judgment on a couple of the claims, to go right to the Second Circuit. And so what happened the other day was Judge Torres said she will entertain arguments from the government about why she should allow them to seek an interlocutory appeal to the Second Circuit. And so they'll be briefing now. The SEC, I believe, has to file papers today if they intend to file for an interlocutory appeal. Then they will file a brief, and Ripple have an opportunity to rebut that brief. And then Judge Torres, over probably a few months, will then make a decision whether she should allow the SEC to approach the Second Circuit for interlocutory appeal. The next step would be, if she were to allow that, is that the Second Circuit would have to decide if the case merits an interlocutory appeal, and that the Second Circuit should hear the appeal. And that's a pretty high bar. So you have to get through the initial bar for Judge Torres. You have to convince Judge Torres that the facts support an interlocutory appeal. Then if she does grant that, then the SEC has the burden with the Second Circuit to show why they should take this as an interlocutory appeal. So it's a number of steps. It is a little complicated for a layperson, but it's really, the government is taking one of, I would say, two bites at the apple. They don't like the ruling. They want to appeal it immediately. If the judge doesn't allow it or the Second Circuit doesn't allow it, after the trial is fully completed, they'll have another opportunity to appeal it.
You made it clearer for dummies like me. Josh, do you want to weigh in?
I mean, I think David did a great job. I would just add, actually going back to the other case involving Tornado Cash. I mean, the parties in that, the plaintiffs have already signaled, I believe, that they intend to appeal. So I would just say, you know, as we see these rulings come out, we haven't reached the end of the story yet. Mm-hmm. And so whether the SEC is prevails in terms of having an interlocutory appeal granted, right, and actually getting, you know, going to the Second Circuit now or over time, right, as David explained very well, I think, or whether they wait until the end of the case, right, the end of the trial that is expected. I mean, we're not going to know the final decision potentially still for a long time. I do think the fact that Judge Rakoff ruled the way he did in the Terraform Labs case, I can see why that may be persuasive, right? If that case had not come down the way it had, perhaps there would be less of a reason for the judge to be inclined to permit an interlocutory appeal. So I think, yeah, it's one of these things where all of this is happening truly in real time. And I actually think, not that I normally say this, but I actually think the crypto press is doing a really great job keeping us all apprised of it and providing appropriate links. So,
particularly in light of, David, you and I were talking about this earlier today, when we look at some major news outlets who are really kind of rushing to, and we get it, there's the editorial deadline, you want the clicks, getting the headlines out there that sound really negative, but really aren't peeling back the layers. Josh, David, thank you both for that. For everyone in the audience, again, thank you for joining. Please do keep questions coming. Josh, can we stick with you for one moment? I want to open it up to both you and I and David. I've been thinking about the judiciary quite a bit this week. And David, you alluded to something a bit earlier. It's very easy to kind of bash on regulators in the crypto space. I think it's a much more complicated conversation than that. But how do judges look at something you alluded to earlier, David, which is, let's use the SEC in the example. Oh, hey, Howey is very clear, so do X. Oh, hey, court, it's not particularly clear, so you should do Y. How is that looked upon by judges? What are your perspectives? And I realize neither of you is a litigator, but we know a lot of litigators, and we certainly see these proceedings. How do you both look at that?
Well,
you jump in first, Josh.
Okay, so I don't know. I mean, I would say each individual judge is him or herself, right? So, but I would say importantly, and each case has its own facts,
right?
So I think that how you're going to look at a particular argument is going to be heavily influenced by the facts that are put before you, because you're not being asked about whether something is clear in the abstract, right? You're being asked whether, like, how it applies to the facts that are being presented. And so I do think also, you know, judges are human. And to the extent that one gets a string of certain cases that provide perhaps facts that might shape your opinion, I think just like any other human, you might say, hey, you know what? I know the Howey test like the back of my hand. This is super clear. Or, hey, actually, you know, this is really fuzzy here. Or, you know, hey, these are bad facts. And I've seen other cases with bad facts. So I think it's hard to say. But I think also this is why the amicus briefs are so important, is because, you know, judges they're not, I mean, I'm not a judge, right? We all know this. But really, I mean, judges are making the decisions based on the facts presented to them. And some of these other arguments from other cases, or for example, if we just go to the Coinbase motion for judgment on the pleadings, right?
Right.
So they made certain arguments in there, right? And then we saw other amicus briefs, rather, including by Senator Lummis, which I believe Kayvon and his colleagues at Jenner prepared, where that brought up some other arguments, right? And so there are it's not always just the parties, but really the judges aren't expected to know everything under the sun. That's why it's important that the community,
Yeah, and the crypto industry impulse for some to say, "Oh, well, it's hypocrisy." SEC says one thing, and then in the next moment says another, is really not focusing on the fact that there are facts and circumstances relevant to the case. David, do you want to weigh in on that?
Yeah, so a couple of things. I've managed some litigations in the past, and a lot of it is like we talked about. It's telling your narrative. I think where the regulators have fallen short is this, and Chairman Gensler has said in front of Congress, so it's very clear there's this Howey test and you apply it. But then as the judges, Judge Torres and Judge Rakoff probably as well as in applying it, when you look at the nuance, when you look at what is an investment contract, what is a scheme, it's just not that black and white. And, if you have 6, legal scholars filing an amici brief and other, well-known participants filing these briefs and having all these arguments, like it can't be that clear if so many different, constituents have a different view of what the law is. And this isn't just sort of, an ad hoc group of crypto folks who are just kind of throwing legal arguments against the wall. And, these are, top law firms, top legal scholars. And I think, by its very nature, that these are complicated issues. And the last thing I'll just say is, when we look at Terraform, I think people fairly uniformly agree that, there was malfeasance, potentially fraud. And I just wonder when a judge is looking at the facts and circumstances of a case and knowing that a lot of people have been defrauded or lost a lot of money, that subconsciously colors your view of, the facts and how you analyze things. And, Judge Rakoff worked at the SEC. Yep. He's really, has a prosecutorial mindset. And so I don't think his analysis was surprising. But I think we all have to remember that the facts in Ripple are very, very different than the facts in Terraform. Yeah. And so they're really night and day in many ways.
David, Josh, thanks. I also want to point out for the audience, and I've said this to you both, I learned something from WSBA members every week, and I just learned that amici is the plural of amicus. So David, thank you very much for expanding my brain. I want to, and by the way, Josh, really good point. I want to shout out to WSBA member and overall legal genius, Kayvon Sadeghi. We'll have to get him on the show at some point in the future. Guys, can we pivot a little bit? I just want to throw something out there. And David, I'm going to start with you because you and I talk about this a lot. I just don't get it. Futures are okay, but anything spot is really, really bad. And I'm basing this on the fact that Coinbase, I get it's a different agency. The NFA under CFTC has approved Coinbase to trade futures. Apparently, we might see an ETH futures ETF come out soon, but boy, those spot markets are really, really corrupt. What am I not getting?
I'm not sure, Ron, because I don't get it either. I don't think these products are great for investors.
Retail
investors. And, I think there's some inefficiency built into these products too. And so, they're expensive. I think there's a clear demand for these, for spot products. And I think that as this market evolves, it's beneficial if we're going to have people who are going to be involved in the space and they want to have a wrapper that they're familiar with, that they have one in an ETF form. And so I think at this point in the maturity of, these crypto assets, it's really time. And every month we go by where we're not doing this, it's just a disservice to retail investors.
Josh, anything you want to weigh in on the futures market? Sophisticated investors like you and David can get into futures, but I'm not sure the everyday person can.
I mean, I think, with the whole cash settled nature of futures, I mean, it just seems that they just don't, as you said it, they just don't want people touching digital assets directly. But I don't think it's just people, right? And this is arguments that some of us have made for years. I think obviously individuals are able to buy digital assets themselves and hold them. I think it's more, I suspect, a fear of large institutions, including things like pension funds and others, right, touching digital assets en masse. And I think that that's, even though we talk about market surveillance and all sorts of other things, I mean, it doesn't, I think opening the floodgates is really, in my view, probably a big concern, as opposed to just whether there is insufficient market surveillance. Because if there, I mean, assuming arguendo that there's a certain amount of wash trading or other sorts of things going on, pump and dump, that doesn't change if you have a future, right? It doesn't change. And so, yeah, those are my thoughts. But I do think, oh, sorry.
No, go ahead, Josh. Go ahead.
I was just going to say, I do think that it is a positive. I mean, the fact that Coinbase was able to get an FCM registration with the CFTC at the same time that it's going to battle with the SEC, I think that is a promising sign, because it's not just countries outside of the U.S. That are.
And an important point, to be fair, it took 2 years of work for Coinbase to put this forward and get it approved by the NFA. We've got some questions coming in. I'd like to address them real quickly. Thank you all for joining. Tyrell, Josh, throwing the CBDC question at you. What are your thoughts on countries launching CBDCs? David, I think we're overdue for a CBDC conversation in our crypto asset working group. But Tyrell's looking to talk to you directly. Josh, what are your thoughts on CBDCs, if any?
I mean, I've got a lot of thoughts. I don't know if I can condense them this shortly, or in this small amount of time.
We're live.
But my question, I mean, my thought to the second question about, do I think they would replace cryptocurrency? I don't think so. I mean, to me, I think it's a totally separate sort of path forward. I think the CBDCs are more of a potential challenge, although it's certainly not the same and not providing exactly the same services as, for example, a stablecoin, right? But I think there are so many different kinds of digital assets that offer so many different types of services, goods, etc., that I don't see CBDCs supplanting the industry. I do think, though, questions about, maintaining dominance, right, as we move increasingly digital, whether, for example, the dollar will remain the reserve currency. Things like that. I think that is playing a large role in terms of CBDCs and thoughts about that. But
and a lot of concerns about privacy as well that we know some colleagues in the industry have put forward. David, anything you want to add to that?
I do, and then I want to pivot back to the ETH futures for a minute. But I'm not comfortable with the idea that potentially, governmental entities could prevent you from spending your own value as you see fit, especially, obviously for legal purposes. And also potentially, preventing, freezing your account, or preventing, purchases over a certain amount of dollars. Like, I'm very, as a threshold level, those kind of questions would have to be answered. I don't think the majority of people are comfortable with that idea or notion, and especially in a democratic country. So I think that's a a baseline concern. I want to just add, Greg Murphy, one of our members, added that with regarding the futures, rolling futures for the next near month costs money and eats at NAV. And it really, again, it's costing you more to own the futures, and you're not seeing the same value you would get in an ETF product. So just another reason why the futures product isn't, as compelling as a spot product.
Yeah, to Josh's point earlier, futures products are not directed to everyday folks. If we could put it in that context. I thank you both. Thank you all for the questions as well. If we don't answer any questions, or you want follow-up, or you have suggestions, drop us a note, info@WSBA.co. Josh, David, we've only got a couple of minutes. I want to raise one other thing. We could keep going, but I want to throw out there. Are we talking about congressional kabuki theater? And what I mean by that is, we've seen some folks in Congress that are really coming down on Chair Gensler and the SEC. We're talking about the special purpose broker-dealer license to Prometheum. I do not know Prometheum. I do not know the team there, nor do we work with them. But that being said, there's really this almost conspiratorial tone to some of what we're seeing coming out of Washington. Why did they get this license? show us your phone records, show us your visitation records. David, Josh, what do you make of that? And will there be more special purpose broker dealers in the future? And why aren't they here now? Deep end of the pool. David, why don't you start? Sorry.
No, I just don't think we have enough time to jump into it in detail, but I will say that there are just some facts at issue and some claims that Prometheum has made that a number of people have challenged. And I think as a threshold matter, there isn't an ecosystem or a framework for what disclosures would be necessary for what security tokens or what an original token, if it were to be a security, what those would be. So it seems very difficult to understand how Prometheum could list those tokens without that regime in place.
Go ahead, Josh.
So what I would say, and I won't comment about the Kabuki Theater question.
Yeah.
To say, I will say.
Was that a little too provocative? I'm sorry, Josh.
Maybe. I mean, it was provocative.
Yeah.
But so I think people truly are, have questions and truly do want to get to the bottom of it. I will just say, as devil's advocate for a second, and I don't know the Prometheum folks. I have no information as to this, but I will just say, given my experiences before FinHub in the past at the SEC with clients, if we think about what we saw in, say, the Laura Shin interview of Rodrigo Serra, Paradigm, and the gentleman whose name is escaping me from Prometheum, one of the things that Rodrigo had said was, look, you have a license, but you don't have a business. Now, that's an allegation. I don't know if that's actually the case. But what I would say is sometimes it's easier to get some sort of approval if you don't already have activities out there that aren't consistent with what the regulators think, right? Because you don't have to try and retrofit anything. And so it's possible that maybe, listen, I don't know what an investigation will yield. Certainly, I'm not trying to cast aspersions, but it could also be just that it's a lot easier to do something when you haven't done anything yet.
So in some instances, license first, business after might make sense in that context.
I mean, I'm not saying it's from a business perspective, that's probably a different question. But I would say, like, when advising people about whether they should at any time go talk to folks at FinHub, right? Which certainly I've done with folks. I think it's always easier if you talk to them at the architectural phase rather than after you've done things that they may not agree with. But again, a lot of these questions are being litigated as we speak. So
Josh, David, thanks so much. Steve Rutenberg, shout out, buddy. Good to see you. Thanks for joining us, another WSPA member. David is 100% right. Privacy concerns on CBDCs. I suspect, Josh, this is going to be in our next legal working group meeting as one of our talking points. We've only got a few moments left. I just wanted to ask you both, what are you focusing on for the coming days and weeks? I know it's not easy because the news is always fast and furious. David, as you're getting ready to fly to the Florida beach compound, what are your thoughts for next week? And then Josh would love your perspectives as well.
Well, in the first instance, the price action that we're going to see in the next, days and weeks. Again, we're not giving financial advice, but my kind of hot take is that I think we're going to see more selling and, over time, lower prices for Bitcoin, Ethereum, and altcoins. And so I'm really keeping an eye around, if Bitcoin holds 25,000 or not. But my first instinct is that I think we're going to see continued sell-off over August and September because of the macro issues. And then the other thing is, obviously, we're all waiting to see what the SEC's documentation looks like for the interlocutory appeal. I think we'll all expect to see that letter filed today, and what their brief looks like will certainly be interesting.
David, thanks. Josh, I know you're busy. You got lots going on. What are your thoughts?
So, I mean, as I said last week, I'm looking at the news, I'm looking at the filings and trying to keep up. I think also, I mean, not just for my own personal information, right, and interest and for clients, but in addition to traditional clients, governments all around the world are watching what's happening in the US. And so in preparing for certain trainings for governments across the world, that everyone is highly focused on what's happening in the US, even if they themselves may take a very different view of the laws and may have very different laws.
Yep. Thank you, Josh. I know we should start covering, and we do certainly do this in some of our working group meetings, some of the international aspects, certainly what's happening in UK, certainly what's happening in Singapore. We'll address that as well. I will stop waiting with bated breath for a GBTC decision. I'm sure it's coming at some point, and I will selflessly plug for the WSBA. We haven't since saved the dates out yet, but David, you and I have been chatting our Crypto Investor Summit in New York City on October 23rd. Lots of members will be there. For anyone who's interested in learning more, drop us a note, info@wsba.co. David, Josh, as always, I truly learn every time I speak to both of you and all the members of the WSBA. Thanks for joining, everyone. Have a great weekend.
Thanks, everybody.
Take care.